Hi, Eric Wold here with Amber Hotel Company, here with another Amber tip. Today we're going to be talking about Delaware Statutory Trusts, or DSTs. Maybe you have a hotel that you'd like to sell, but you're concerned about the prospect of finding a replacement property for a 1031 exchange, either due to lack of inventory or current borrowing costs, or you might be looking to retire and no longer want to be running a hotel day to day, but would again like to defer capital gains tax and continue to have cash flow. Or perhaps you've already sold a hotel and you're coming up on the 45-day deadline to identify a replacement property. For any of these situations, a DST might be a good solution for you. A DST is an entity like an LLC or other ownership structure that owns real estate and allows investors to purchase a fractional share of the trust. So if you invest in a DST, you own a small piece of whatever property that is held by the trust. DSTs are unique in that the IRS has ruled that they qualify as a like-kind investment for a 1031 exchange. So if you sell a hotel and you invest the proceeds into a DST, you can avoid or defer paying capital gains tax. The assets held by a DST are institutional grade properties like multifamily apartment buildings, hotels, self-storage facilities, net leased retail that are professionally managed. So they serve as a passive investment, providing monthly distributions from the property income, which again can be great if you're somebody who's looking to avoid the day-to-day demands of running your own property. The real estate is usually held for a period of 3 to 10 years, after which the property is sold and investors receive a pro rata portion of any proceeds, including appreciation, which can then be reinvested into another 1031 exchange if you desire. DSTs also offer opportunities for diversification. You can distribute your funds across different asset types and locations. A few things to note: DSTs and the properties within them are subject to the same risks as any real estate investment, and there's no guarantee of returns. DSTs also tend to be quite illiquid. There's not much of a secondary market, and so it can be challenging to sell your ownership share outside of the end of a cycle. If you'd like more information and you think this might be something that could be a good solution for you, you can reach out to one of our agents and we can connect you with our partners who can share more information about these. That's it for today's Amber Tip.